Welcome back to Upside Down Data. We need to talk about Bitcoin and where we're heading next. I'm sure you're all very well aware Bitcoin has not been doing well recently. And if we actually just look at the weekly chart, we see how bad it is currently looking, really clearly breaking below this range that Bitcoin had established between the low 90Ks and then up to the high here of 109K, really breaking down, looking like we're probably going to have to test some of these lower levels here. Really, the next level of support we might look for is in the low 70K region. A very dire looking chart right now. So from a technical perspective, it doesn't look great and we might have more pain to come. What I want to focus on more in this video, though, is even if that does have to happen, in some ways it could just be an opportunity if the bull market is still intact and we ultimately go to new all-time highs afterwards. So I want to spend more time talking about what is that longer term outlook. Is 109K likely to be the top for this bull run, or is there more gas in the tank? And to start us off, I really want to get into the context of what's going on and then talk about data specific to Bitcoin so we can interpret it accordingly. So one of the main reasons why Bitcoin, and not just Bitcoin, frankly, the stock market, here's the S&P 500, here is the NASDAQ, Dow Jones, we're seeing a risk-off mood in risk assets generally. It's not just crypto, it's not just Bitcoin. We're seeing this everywhere. We're also seeing bonds starting to catch a bid with yields starting to lower. Look across different durations, you see the same thing. And that's often a sign of a flight to safety. People fleeing from riskier assets and then buying things that are perceived to be safer, like, for example, bonds. And one of the reasons why this is happening right now really has to do with the policies of the Trump administration. Now, I know that anything has to do with Trump quickly devolves into just partisan bickering, where people who support Trump will think that there's nothing wrong. People who oppose Trump will think that everything is wrong. I am going to just look at this objectively, try to cut through the noise and just say, what is this likely to do? Putting aside any of that noise, what are the likely potential outcomes of some of these policies and why are they fueling these market moves? One of the things that's really beautiful about markets is they don't care about your ideology or your political beliefs. They are about making money. And so if policies of administration might be leading in a dangerous direction from an economic perspective, the market's going to react accordingly. And so really it's the more accurate barometer of truth. And what the market is telling us right now, what it's worried about, is all these moves that Trump is making, especially around tariffs on these major trading partners, Mexico and Canada, might lead to a possible recession. And in fact, Trump himself won't even rule out the possibility of a recession. This seems like something they are potentially willing to stomach to achieve their longer-term goals. So from that perspective, it seems very logical then that the market would be concerned. If you have the president going and embarking on pretty drastic trade policy and is unwilling to say that he's not going to stop just if a recession hits, that's something that they might be willing to stomach, it makes sense for risk assets to behave accordingly. Now, people can argue back and forth all day about whether or not Trump is serious, if he actually means it, so on and so forth. So far, it's been better to believe him than not to. So that's why, in my personal belief, I'm not taking this with a grain of salt. I'm taking this pretty seriously. If that's what he's saying, so far he's been doing what he said he was going to do. And so it makes sense to continue on with that footing. Now, it's not just that makes me concerned. Again, this is a data-driven channel. I'm not just going to take headlines and news and say that it is destiny by any means. I also like to look at what the data say, and is there actually fear of recession right now from a data-driven perspective, ignoring everything that's going on? If you had no idea what Trump was saying, if you had no idea what policies he was putting into place, are there still reasons to be concerned? And for that, I want to talk about a model that I built actually a while ago. And I talked about this to those who had subscribed to our Polarity Digital Pro subscription service. So they were aware of this when I was first building it. And this is a recession probability model I built. Basically, it's trying to predict how likely it is a recession is coming in the near future. And this particular model I'm showing you here was trained on data up through 1998. So this is all the training set. This is the test set over here. And you see it does a very good job of basically predicting over 20 years of recessions. So you get these spikes, and then soon after each time, you get a recession. And where we are right now is not looking too dissimilar. Now, what was interesting about this time was you'll see how elevated the recession risk was for quite a while. This is what kind of tripped people up. A lot of people saw built other models. There are other prediction models out there for recessions. People built them, and they spiked up back over here in what was actually ended up being the bottom. But around early 2023, in 2022 and in 2023, that's when everyone was saying a recession was around the corner. It didn't happen, of course. Then the stock market shot up. There's the S&P 500 in the background here, by the way. Stock market shot up. But when you look at this model, one of the things you'll see is you don't tend to see the recession until after this model has already really fallen off a cliff. It's either the recession is on you when it falls off, or the recession is about to happen. And then, of course, when you look at the training set, now this is, of course, you have to take this a little bit with more of a grain of salt because this already knows the outcome. But just the behavior that it displays there, then also in the test set, is once it's fallen off a cliff, that's really when you're in that danger zone for a recession materializing. And lo and behold, that's exactly what's happening right now. And so even if you knew nothing about Trump, nothing about what he's doing and the policies he's putting in place and all those kind of things, you just looked at this model and said, all right, are we in a danger zone? The answer would be yes. That if we're going to see a recession, this is that critical window. And that's where, from my view, if that's the case, this would be the time that ideally you'd be seeing policy that's not trying to stir things up too much, that's not trying to potentially cause a lot of disruption, because we're already in a delicate situation, most likely. We're already in a place where a recession is likely, so you don't want to rock the boat. And of course, massive tariffs on close trade partners is something that's going to very heavily rock the boat. So again, not political. This is just trying to comment on what is happening in the current context. If you have a different perspective, more power to you. This is not financial advice. These are just my views. But when I look at this is something that gives me a lot of concern. And it's where it makes total sense to me why the market is reacting the way it is and why it's not going to surprise me at all if Bitcoin has more pain, has to come down at the least to these levels or maybe further. Because you better believe if we do get a recession here, as there's a distinct possibility that we will now, then Bitcoin is unlikely to just go on some major bull market in the face of that. It's probably going to do quite poorly. The only other recession that we know of in Bitcoin's entire history was the one that happened over here in March 2020. That was an extreme one that was a bit of a V reversal out of it. But look how much Bitcoin collapsed during that time. And that was a short recession. That was one that reversed quite quickly. Think of what Bitcoin might do in a prolonged, more nasty recession. So obviously we don't know what's going to happen. If we do get a recession, we don't know how deep it's going to be. We don't know how severe it's going to be. But certainly recessions are not good for risk assets. You just go back and look at these past recessions in these red lines here. It's never been a good thing. The market's always fallen quite far. And if the stock market's going to collapse, then you better believe that crypto is probably going to be caught in the crosshairs as well. So that is the context that I wanted to set up before now talking about some models specific to Bitcoin. The fact that we have an administration that's willing to stomach recession to achieve their longer term goals and being in a very precarious position to begin with in terms of the probability of recession. It is a scary point from that perspective, in my opinion. So now I want to talk about some models specific to Bitcoin. But first, if you want to see live data from those models and more, you can go over to our website, polaritydigital.io, and sign up to our Polarity Digital Pro plan, and you'll get live access to all of those model data and on-chain data for Bitcoin and a bunch of different altcoins. Link in the description if you're interested. So I want to start off by talking about our upside downside potential indicator for Bitcoins. This is a risk model. High values mean high risk, low values mean low risk. And this is the long-term version that cares about moves that play out over months to multiple months, so more macro in its time horizon. And you can see that in this run up to 109K, we bounced off the exact same risk level, basically, that we bounced off of up at this prior all-time high we had set relative to the previous all-time high back here in early 2024. And we're now resetting. And so if the bull market were still intact, we're getting back down to levels that would be seen as value zones for Bitcoin. But the problem, as I was mentioning before, is that if we are going into a recession, then it seems less likely that the bull market is just obviously going to be intact for Bitcoin. It seems like we probably have more pain. And if that's the case, you're really looking for lower risk levels before you get too excited. If you're going into a bear market for Bitcoin, you don't really want to get excited until you get down to below, -4, almost at the bottom of the scale, which is -5 on this model. That's where you see those bear market bottoms. You don't see bear market bottoms happening at higher values. And so that's where I'm going to be watching that closely. And it really does, and this is going to be a recurring theme as I talk through these models, comes down to your outlook about recession. If you think we're going to avoid it and you think that ultimately risk assets will recover, then this would be probably a value zone where we are right now. But if you do think a recession's coming, this really doesn't look that way at all. And this is where I talk about data. It's important to think about it in context, because one number can mean different things in different contexts. If you're in obviously a bull market, this is already looking like a value zone. If you're about to enter a recession, this is probably anything but a value zone at this point. Now, better value than it was up here, but not as deep value as it maybe is heading. And another model we can look at to give us an idea about relative over versus undervaluation is the DXY based fair value for Bitcoin. That's this red line here. So basically the idea is that the DXY, just pull it up over here, the DXY tends to be inversely correlated with risk assets. So when the DXY is doing well, risk assets tend to do poorly. When the DXY does poorly, risk assets tend to do well, so on and so forth. Now, notably, more recently, the dollar has been collapsing. It's been falling off a cliff. And so that's why when we go over here and look at the DXY based fair value, we actually see it coming back up. And in fact, Bitcoin's price has actually fallen below what its DXY based fair value is at this point. Now, historically speaking, that oftentimes has been good. If you get well undervalued under the DXY based fair value, that tends to be a good acquisition point for Bitcoin. But importantly, there have been points in prior bear markets where you will see us catch up to the fair value. We don't really get too undervalued. Fair value then kind of changes. It kind of moves down, and then price continues moving down until you can see that deep value zone. So this is a constructive sign to get there. But what I like to see before getting too excited is seeing more of a gap here, seeing price fall more heavily below its DXY based fair value. That might be a sign that we're actually in a value zone, because just tapping it, tagging it, has not always meant you're there. I mean, look over here. They tracked very close with each other, just going down before we ultimately got to the bottom of the bear market. It's really when you see this big gap emerge, when the fair value is a lot higher than the price, where that can signal a misvaluation that can be worthwhile to capitalize. So far so good, but it just goes back to that idea that this is a critical moment, that we're gonna have to wait and see how this plays out. We're not at the point where we can call this one way or the other, in my opinion. Same thing with risk. It really depends on where we're at in terms of where we're gonna go. Same thing with what we're talking about with the recession. Probably the next 6 months to a year are that critical period where we will find out. And so with crypto, we tend to move more quickly than that, but we will know, I think, soon. I think even in a matter of months, we may have a better sense of where things are heading. And this is an important development that I'm going to continue to watch. And how does it develop? Does fair value start moving back down again with price? If price keeps going down, that's not as constructive of a sign. That's more concerning. Does fair value stay higher than price? That would be a constructive sign, maybe suggesting we're back at a period like over here where buying is a good idea. So obviously not financial advice, but just one more thing that I'll be looking at that I think is going to dovetail into what we were already talking about in terms of the broader narratives. And the final thing I want to talk about here is our market cycle model for Bitcoin. So this is a model that tries to very quickly identify the emergence of new bull or bear markets. And it's done a very good job of doing that so far. And I've talked in the past, but one of the reasons I got so bullish on Bitcoin back over here was we flipped bullish on this model, then off to the races we went. Now, something I'll be watching is, can we stay bullish here, or do we see a bearish flip, getting back below this critical level on price, which might suggest then a more confirmation signal that the bear market is here, that we're in a bear market, we're no longer in a bull market. And so that's really kind of to wrap it up then. When you just look at Bitcoin's data on its own, it's somewhat ambiguous. We're in a bull market. We've been in a bull market. This model still says we're in a bull market. We're starting to get to more constructive levels in terms of fair value. We're also seeing that in terms of risk. But the broader concern, kind of weighing over all of this, is this idea of a recession. And so it ultimately comes down, in my opinion, to how you interpret those other pieces of data by what you think is going to happen here. If you think that all this recession talk is overblown, everything's going to be fine, then maybe you just ignore this. You say this time's different. We're not going to see a recession after this fall like we're seeing on this model here, and therefore this is probably a good buy the dip opportunity on Bitcoin, and crypto will have its time in the sun again. But if you do think a recession is coming, if you believe this model and other recession models that are starting to flash warning signs now, then it becomes a lot more scary. And that's really where it changed the way that you look at these data points, because we know with crypto that things can get a lot worse. We can see much lower risk levels here. We can see much lower price relative to fair value than we've seen before. And of course, we can flip into bear markets that go down quite a bit after they flipped into bear markets on a model like the MCM. And so that might not be the most satisfactory answer in some ways, but it's just the truth. I think I've already been saying this really ever since we got to this period with Bitcoin where we started struggling so much over here, where it was becoming less and less clear that the bull market was necessarily just still on. Uncertainty was actually the right outlook at that point. And it doesn't mean that you have to be fully invested or fully out of crypto. It's totally fine to take a middle ground, to hedge yourself, take some profits off the table, but stay invested if you think that things could reverse. And so it's really up to you. Again, not financial advice here. It's up to you how to navigate this. If you're really convicted that we're still in a bull market, then this would be that buy the type of opportunity you've been looking for, to go all in, go heavy in, and buy and then ride it up further. If you're really convicted that we're going to go down, we're going to have a recession, we're going to have a bear market, whatever the case may be, then probably not being in the market makes sense. But if you're not sure, that's also okay. And that's where you can hedge your bets. You can take some profits, but you can still remain invested in case there is more upside to capture. And how you play that is up to you. I just want to weigh out the data and let you make up your own mind. And really where I'm sitting right now is I'm taking this recession risk very seriously. And it's not just from the data, but it's the fact that we have data that are backed up by actual developments, actual policy decisions being made by the current US administration, and also them signaling that recession is not a thing that they're afraid to make happen, basically, to endure if it has to be a consequence of their broader goals. And so that's why I'm taking it quite serious. And I was not a person who took it very serious back here, recession. It's now changing based on the way that the data are developing and the way that, frankly, just the world situation is developing, the policy dynamics, how they're shaping up. And so I'll be looking at this and then harmonizing that with the other data that we have. And certainly, if suddenly the outlook totally changes, if we see a massive policy change on the side of the administration, or them start communicating quite clearly that they're going to be trying to head off a recession, or that the Fed might be looking like they're much more likely to just kind of throw inflation concerns to the side and be much more likely to try to support the jobs market and really cut rates, quantitative easing, all that kind of stuff, that could change things very quickly. So that's why I remain fluid, I remain open-minded. But right now, the current situation, this is where I'm sitting. That's where I'm sitting. All right, hope this was useful. If you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And you can also go to our website, partydigital.io, to see live data from our models and more.